right, man. Here we go. Welcome, everybody. Welcome, welcome. Thank you so much for joining us on our live stream today. It is 12 o'clock here in Chicago. Yes, I am live here on the SIBO floor, Chicago Board Options Exchange. We are in the S&P 500 options pit, and look who I have with me live today. Flew in right from Denver, Colorado, just to be with us today. The one and only disciple of trend, Charlie Moon. So, Charlie, always great to see you, brother.
Thank you, brother.
We are not just colleagues. We are just not co-workers. We are dear friends as well. This guy is the man. But let's get right down to it here, all right? So it's noon. I'm looking up here on the big board. S&Ps are basically flat. We've seen pretty much around the flat line all day. We were down 10 or so points. There's a lot of jostling in the market right now. There's a lot of just kind of positioning for this Friday. This Friday is really big. Number one, the government's going to come out with huge inflation data, PCE, the personal consumption expenditure index. That is the number that the Fed looks at for inflation data. Yes, we got CPI a couple weeks ago, lighter than expected. If this follows up also in line or lighter than expected, that's going to put a lot of pressure on the Fed to start cutting rates. Yes, July is pretty much off the table at their Fed meeting. September, there's about a 65% chance. I guarantee you if that number comes in lighter than expected, we're going to see that September number jump up. Quite frankly, Charlie and I were talking about this earlier, I think the Fed should be cutting in July. They are behind the curve. The data they look at, it's in the rearview mirror. They're not looking forward, guys. And if anybody was paying attention today, new home sale data came out this morning. It was in the tank. There was an expectation for up a couple percent. It was down about 11%. If that is not an indication also of what is going on in the economy, I don't know what is. So I really expect the Fed not to push up to July, though I think they should. I think September is almost a certainty at this point, even though the market is 65% probability. Okay, looking at volume is so light. We always talk about this. S&P futures volume, typical average daily volume, about 1.6 million contracts. We're halfway through the day already, guys. 700,000 contracts. That is nothing. But let me turn this over. Charlie, what are you seeing in the markets here? And he's going to talk about what he sees in his room, some of the short-term trading, some of the penny stock pumpers, which are getting life again now. What are you seeing, man?
Yeah, so in relation to these micro caps, we talk about activity. Scott and I were discussing the day that we saw the exchanges switch out from T+2 to T+1.
That's about what, a month, 6 weeks ago or
Yeah,
so?
and the micro cap market has been hit or miss over the last 2 years, and now all of a sudden we're seeing daily activity in a lot of different names, a tremendous amount of volume, and more importantly, huge percentage jumps. Stocks that were going from $5 to $20.
Charlie, give me one. I'll put it up on the screen for everybody.
MLGO is one of the most recent.
MLGO.
Yeah.
Get that baby up there.
So MLGO has been on a huge run, pulling back quite a bit today, but it's not too much of a surprise.
It's a huge jump is right. Look at that, guys.
Right.
This is let's see, this is June 4th. This is 3 weeks here. Look at that. That is a major. So
day traders haven in all honesty. And then this is what we've been noticing is because these have been very sporadic over the last 2 years, once every few months. And just this week alone, MLGO, VNCA, NNE. NNE has been on a tear over the last few days.
Let's get that up here also.
Yeah.
NNE. These are foreign names to me, by the way, guys.
And to me as well.
This is Charlie's sweet spot here. Boom,
right.
Look at that. This is almost like when pot stocks were
exactly
hot and heavy a few years back.
Or what this really reminds me of is when right shortly after COVID hit, there were a lot of names that were kind of gearing in on working towards some sort of vaccine. And we just saw a huge plethora of stocks, anything that had some sort of news that would be viewed as positive by the market. and day traders and investors were just taking hold. And because of the profile of these names, they're extreme low float. One, that makes it very difficult to find borrows to short against. And two, when we have this huge constraint on supply and the demand is really one-sided, we just have these, outwardly extraordinary movements in these stock prices. And one of the things that we have as a rule in terms of the penny stock program is that you don't want to be married to these names because you'll be left at the altar and it's going to really, really be, hurtful. So, just kind of get in, get out, got to make your money and take it and run. And it's really good to see that side of the market really perking up. Obviously this week there's a lot of anticipation. The market's kind of in a, like a stagnated waiting period. There's a little bit of activity in the semis right now because of Nvidia's shareholder meeting, but everything, like Scott said, is really gearing towards this report, this PCE report Friday morning.
Yeah, that and we've got the Russell rebalancing
Yes.
and quarterly expiration of these S&P 500 contracts behind us, where we're now starting to see a lot of rolling out, whether it's a month, whether it's to the September quarter. So this Friday, guys, has the opportunity to be as busy as last Friday quad witching was, which last Friday actually turned out to be a dud. This Friday could make up for that.
Yeah, it wouldn't surprise me if we start seeing a little bit of repositioning starting on Thursday. Some liquidation, some new trades being taken care of. I don't know what's happening in the background, but it's freaking awesome. And here's the thing: when we get to these expectations about inflation, right? Like Scott said, the Fed has been really been behind on the curve. They've been behind. They've been slow to react. And with the recent CPI data, especially with the way that the market has reacted, if this PCE number comes in softer than expected, quite frankly, Scott was mentioning that September is going to definitely jump. But it wouldn't surprise me that the market starts anticipating and pricing in the fact that July could be on the table. And, Scott is 100% correct in this scenario. They are behind. So why not try and play catch up? Now, the big thing is, of course, is how strong the economy has been, which is what has tempered or which has caused the Fed to be a little hesitant in dropping these rates. But, the PCE really comes in soft. They're going to force their hand. And let me in you on something, Bulls. It's going to be a great thing. We're going to see stacks upon stacks within the tech sector. Semiconductors are going to be doing a lot of the heavy lifting, but if you've been paying attention over the last few days, Meta has started perking up. Amazon just made new all-time highs. Google made new 52-week highs. Microsoft today is making these highs. Apple keeps getting bid up here as well. And so when we have the Magnificent Seven also rolling in relation with the semiconductors, and because of how Amazon has performed today, folks, we are now finally seeing some love for the cloud sector. I mean, we have snow up here right now. And if you look at snow, up nearly 5% today. They hit 52-week lows this morning and have literally just been ascending straight up. So when we see the likes of snow, we see the names like Team, which has been heavily suppressed, and we'll try to pull this up here in a second. Also making a run. They're up 2% here while the market is fairly flat. Loading up here right now. Yeah, up $3.49, up 2%. When we start seeing these stocks come to life, and then we cross correlate that with names like CrowdStrike, Zscaler, Palo Alto, PANW, and NET. NET, by the way, has nearly a 9 to 10 point gap fill to the upside that they're trying to break free and fulfill. This is where we get that secondary boost. Again, we know that the semiconductors have performed well. Names like ARM and NVIDIA, Micron and AVGO and Qualcomm have been true leaders. But then now let's add in that cloud sector, right? So, we see Team up 2% here, MDB in the AI program. We've taken a nice little play here, up 4.75%. Let's look at Datadog, DDOG. Datadog is up 3.5% at this moment right now. And then a great barometer for the cloud names, especially the growth ones now, NOW, they have been starting to creep up and come up off the lows. So, when we start seeing these names pile up and race up here, there's nothing, in my opinion, that's giving a much more bullish sign, right? We know the semis are doing all the heavy lifting, but there's going to be nothing more bullish than seeing the semis, cloud, cybersecurity, and then the Magnificent Seven, right? That's Meta, Google, Amazon, Netflix, Microsoft, Apple, etc., all doing that heavy lifting. Oh, might I not forget, a little stock named Tesla today is also breaking out up 4.1%, racing to their next resistance level at 197s. And after that, we're looking for that break above 197 to tickle on that 200-day moving average, which is this little teal blue line here, right around 209. So when we say that Amazon, names like Tesla is just getting started, like I said, the others are at 52-week highs. Tesla has a ton of room to try and make up. Apple did it in less than a month. Why not Tesla? And if these stocks, these darlings of the market, start behaving like they traditionally have behaved over the last few years, right? The last 6, 7 months, they've been a little bit tempered because of all the excitement around AI and the AI plays. If these stocks are now starting to lead, well, we know what the markets are going to do. We know based on their market weight cap, and then of course, this is all going to be fueled by that PCE number. Now, if PCE comes in much hotter than expected, well, the markets are going to be unsure what the Fed is going to do. When the market's unsure, they tend to go risk off. So a lot is riding on this Friday. The Russell rebalance is going to be really interesting. You know, obviously the quarterly options, you know, these guys behind me, these heavy hitters behind me are going to be a factor. You know, this is all leading up, by the way, into a very, very shortened weekend with the holidays. You know, when Scott said he expects Thursday and Friday to be crazy, you know, think about it. How many traders are going to be taking off next week? You know, how many are going to want to handle all their positions and really close out and really kind of, you know, set themselves up for what's going to happen after the holidays? And that's going to be really, really big here in the near term. So, folks, let's see if Apple continues to rise as well. They're up 2.2%. This is really important that they remain a leader. Remember, this is not just a consumer discretionary name now. They are starting to open up the window in relation to growth capabilities, Microsoft growth capabilities. And it really starts with the two letters AI. And it's really hard to ever expect these conglomerates, right, these powerhouse names to have the growth cycle start getting built in. But when they do, it's like a brand new market all over again. The big jump in Amazon is really important here. When we look at Amazon, they were at 191, 191.70 as their all-time highs. Earlier today for a day trade, we looked and watched the stock hit that actual tick, 191.70, roll over, start going sideways. As we're walking up, they just broke that level, and I said we're looking for that break, pullback, and that dip buy to go for a ripper. Well, we went from 191.70 to now trading almost at 194s. So now we're seeing these major caps showing breakout capabilities at the highest price that the stock has ever seen historically. That tells you demand is extremely strong. And seeing this going into the PCE report, folks, that's pretty exciting stuff. I don't really think that people are going to want to bet millions of dollars to the upside if they didn't have a good feeling how this PCE is going to turn out. So, a lot to digest here. Sorry, I've been talking so fast. It's a lot to digest, but certainly this is kind of where we are in relation to the state of the market. And more importantly, seeing that cycle and more importantly, that demand coming in for cloud is going to be super, super important.
Should I fix the audio real quick?
Oh,
Keep going.
the audio is messed up. So apologies. Is it too loud?
No, it's just delayed.
Well, it's always delayed, isn't it?
Uh,
The legend Michael here.
see if this works.
233. What are you trying to put up a fib number? So we'll see if we can get this fixed up here for everybody. Yeah, dipping diving. Listen, I haven't been on the floor in quite some time, but I'm glad to be here. It's really good to see. Again, volume is still remaining very thin, very light. So it just shows me that everybody's just kind of in a wait and see mode, folks. NVIDIA, especially how their shareholder presentation going forward, which started a bit ago, could certainly have some sort of residual effect on the broad markets. But right now, the S&P 500 is looking damn good. Let's see if we can continue this ascension, ladies and gentlemen. So yeah, looking at the housing data, looking at what the market is teeing up in anticipation for this PCE, the Russell rebalance, and more importantly, just seeing the markets come alive. When we see micro caps, we see tech leading the way. It's really, really important. Now, I'll tell you right now, you know that we're going to be in a really good bullish state when not only are we going to see tech rising, but we're going to see energy stocks, industrials, transports also moving in relation. We don't want the NASDAQ to gain 300 points and the Dow to be down 300. We want to see that continual jump. And when we see that broad market rush, folks, people are anticipating a really quiet summer. Don't sleep. Remember, 2024 is a year of AI. This is going to be really important. We're just getting started. Keep that in mind, okay? So if you feel like you've been a little too late, listen, it's never too late. Not when there's a lot of upside to go here. Brother, come on in. I was just tripping up how much AI has been moving the markets.
Oh, yeah. Hey, everybody. Sorry, I actually stepped to the side because I just did another interview live on WGN radio here in Chicago. But I know Charlie was talking about AI and tech stocks and everything. Did you touch on Snowflake and Amazon and how Amazon is
100%.
kind of bringing up the market today? Because one thing you do have it up on the screen. One thing I want to talk about, and for those of you who are members here with us, you'll know that we actually have a current live position in Snowflake here. And the reason we got in this, guys, is if you look down here, this is a 2-year chart of the stock now that's up on the screen. And if you look at this right down here, look at where Snowflake got down to yesterday and the day before compared to that support that we saw over the last couple years. That was one of the reasons why we wanted to take a bullish position in Snowflake. This thing was coming down to a major area of support. Now, does that mean that's always going to hold and that's always going to be a winning trade? No, of course not. But, there's that old adage of past performance, not necessarily indicative of future performance, but we do use past data to help us make decisions on what may happen in the future. This one so far has been a beaut for us. So the stock is up right now. The stock is up about $5 or so, okay, from where we got in. Now, on a percentage standpoint, $5 on a $130 stock, that's only 4%. Our option position is up about 40%. Okay, so that's this is just a small microcosm, but this really goes to show you how options give you an incredible amount of leverage trading without having to put up a ton of capital, without having to bankrupt your account for margin purposes. So just wanted to point that out because I know you talked about Amazon, and that's really doing some of the heavy lifting, and that's taking Snowflake with it, and that's okay by us.
Math.
Let's get back to what to expect this Friday. Again, I'm expecting a really busy day, and maybe it's Thursday, like Charlie said. We might see things really pick up tomorrow in advance of Friday with the PCE news, with the Russell rebalancing, and with the S&P potential rollout. But then what? Then we have what next week? We've got a holiday. We've got July 4th, okay? And that comes in the middle of the week. That is Thursday, July 4th. Markets are closed. Friday, July 5th, half day in the markets. So what we are likely to see once we get that news out on Friday, okay, as the day progresses this Friday, we are likely to see a lot of premium selling, a lot of option sellers coming into the marketplace, trying to get ahead of, trying to take advantage of that theta, of that time decay premium that's going to roll off pretty quickly next week because of the holiday. Oh, what's going on here? Let's see. what just traded here? Somebody just sold 1,200 of the October 6,600 calls in the S&P. That's right, 6,600, basically 1,100 points higher than we're trading right now. But going back, we have to, when you're trading, guys, we can't be stuck, and Charlie will tell you this too, we can't be stuck in our own little bubble, right? We almost have to be like, I'll use a sports adage here, a point guard or a quarterback, where you can kind of see the whole court, see the whole field in front of you, know what's ahead of you, prepare. So trust me, we are preparing, and I know Mike Shore is doing this as well, for any positions that we are taking next week. We are preparing as if there's literally only 3 days of trade next week. Okay, you gotta consider that, guys. It is real. Theta, premium, the way it works with options, that is real. It does happen. All right. Question here, Charlie. I'm gonna throw this over to you because you're a heck of a lot better than I am in analyzing some of these stocks. Any news in Zillow? Someone, who is that just asked that? MM. Not sure, but here's Zillow Group up on the chart here. I'm gonna throw it over to you.
I haven't seen anything. It could be effective in relation to the data today. Zillow, last time there was housing data and it came out bad, actually was ripping to the upside for around 8%. So looks like they're up right now 0.5%. They're probably outperforming a lot of their peers in the sector. Ultimately, Zillow's model is very different than the home builders. They benefit from the technology side as opposed to, the home builders, which are relying on margins based on materials, based on demand. So, effectively Zillow could have a better relationship in the NASDAQ rallying as opposed to, BLDR, for example.
And one other thing with the news today, we were talking a little while ago about the home builder the new housing starts, how catastrophic, quite frankly, this report was. Zillow, if I'm not mistaken, it's all resale, right? Mm-hmm. Maybe there's a small touch of advertisements or mm-hmm. new home listings on there, yeah. But it's all resale, and we know what's going on with the resale home market. You just can't get a house. I mean, if you want to sell your house, you're in a great position. But if you're on the other side and you're looking to move, you got to buy a house, you're a first-time buyer, boy, luck. It's all the age-old adage of simple economics of supply and demand, and there is no supply right now and tons of demand. So what happens when we see that? Prices are up. What are we seeing with home prices, resale home prices? All-time highs, very little supply, slim pickings. Paul, vol is good for me. Vol's good for everybody, man. We love volatility. We want volatility. Absolutely. What else? Shoot us out some questions here, guys, because this is Minds of Markets. You've got one of the best. I'm not gonna say me. You've got one of the best here. You got to pick this guy's brain here on anything that you can. We're looking all around us here. Yes, told you he's my good buddy. For those of you that didn't know this, actually, gonna segue a little bit. We actually went to the same high school. Not at the same time. Charlie graduated about 12 years before me. but we went to the same high school. Didn't know we grew up in the same hood, but we did. And give a shout out to those Maney's Demons there, guys.
Go
for
Demons.
Anybody that wants to look it up there. Not bad at all. But Charlie, what else do you see? Hey, what's up?
What's up, Shiva?
That's Shiva. There we go. Up? I was trying to pronounce the name properly. Shiva, how you doing? Hopefully everything is good. What else you seeing, Charlie, ahead of maybe the weekend here?
Yeah, you brought up a great point, especially about next week, and something that I had said. Don't be surprised that everything's getting teed up for the next 2 days and how crazy it's going to be. And it's good, of course, not everybody's going to be willing to trade Monday, Tuesday, Wednesday. Having that abbreviated week, a lot of the times things do get slow. And it wouldn't surprise me if that traders are like, all right, we're done, and we'll start up back after July 4th. So it's something to be on the lookout for. What Scott said was 100% correct with the theta burn and how to play that in That's not a trade. That was soccer, by the
let
way.
me give another little segue here as Charlie's talking here. You may have heard the big noise in the background here. That was no trade going on. They're watching soccer. It looks like Ukraine versus Belgium,
Belarus.
Belarus.
Belarus, yeah.
They're watching Ukraine Belarus right now, and there was just almost a goal. So that was the big hubbub here. It's a really good point about the volume and maybe lack of trade is, guys, don't ever try and force anything out there, right? If your charts aren't aligning and if the stars aren't aligning and the volume's not there and you just are unsure, step away and don't trade, guys. There's nothing wrong with not taking a trade. There will always be another opportunity. We both promise you that, whether it's in a minute, an hour, or the following day or week. There's always going to be another trade to make. Someone's asking now, Charlie, I'm going to turn this over to you about Nike earnings after the close today. And I see Nike trading down today right to their 50-day moving average. What are we looking there?
So, for me, the school of thought, especially in recent names that have made these huge jumps, FedEx is a great example.
What a
is that,
jump in FedEx.
Yeah,
Wow.
when these stocks are that far off their highs, and with Nike, they're basically in the basement right now, the likelihood of them jumping is actually greater because expectations have been tempered. Now, the question
Yep.
is, have they been able to fix their issues over in China in relation to demand? And if they did, what was the expected move, around seven plus
Yeah, so
dollars?
it's about $7.50 to $8, guys, in Nike, and we
Yeah.
can go through that on the screens here how we come up with that. But you're looking at a little bit less than 10% expected move.
Yeah, and so depending on where we are, that pretty much pins us right into the 200-day moving average. And if they exceed that level, this is where I could see a little bit more of an extraordinary move to around 107, which was like a recent high level. And this is, we were talking about this yesterday with FedEx, where the expected move was to around 275. There was a gap fill there, and once they exceeded that level, it's just they're like, all right, let's just make new 52-week highs. It just shot on up. So this is kind of where Nike could make that extraordinary move to the upside in relation, because one, expectations are tempered, and two, of course, they're breaking through a key technical layer, and then next level is about $4 or $5 from that resistance level. Now, if they actually break down, there's a little bit more support. I think it's centered all the way around to like 83 to 84.
Yeah, here we've got some right here around
Yeah.
88 first.
Yeah.
But as you were talking about on the upside here, guys, if you look at the chart I've got up on the screen, okay, we're right here where we're trading right now on the 50-day moving average. Charlie was talking about watching that upside move, that if we get that expected move, $7-8 to the upside, that puts us right to this blue line here, right near that 200-day moving average. And if we break that, this is what Charlie was talking about, there's a big pocket up there. There's really no resistance until
Right.
that next level he was talking about here at 107-ish or so. So certainly, like, what happened with FedEx here, it absolutely has the opportunity where if there's a good number that comes out, and more importantly, guidance, which I think is going to be the key here,
Very much
there
so.
is that opportunity for a big blowout up, maybe even, 1.5 or 2 times that expected move.
Yeah, and if we take the flip side and a name like Micron, for example, which is trading at extremely frothy levels in comparison to how they normally trade, they are in a different situation where they actually have to have almost a perfect report to sustain the valuation that the market has set them at. Otherwise, they're going to get corrected very quickly. So, what I was saying in the room is that you don't want to see Micron get dealt, right? Dell's been on an extremely huge
Get
jump.
dealt.
Yeah, they just got totally knocked back. And a lot of expectations are, I want to go long Micron, I want to go long Micron. And we're only looking at this, and this is where traders sometimes get those blinders where they could only see it go up. So we got to make sure that we understand that if there's any concern out of that report, we're going to see Micron get absolutely mushed like Dell. So just be careful in terms of only thinking that we could go in one direction with that stock.
And while he's talking about Micron here, I'm just pull it up on the charts here. You can see we're kind of right in the middle of no man's land. The 50-day moving average here is down right around 125 or so. You've got these recent highs that were almost up at 160-ish, the pullback, and then way down here, you've got the 200-day moving average down here right around 96, 97 or so.
With the gap fill.
With a big gap fill right here. right there, which is right around 97 also. So yeah, that's a really key important area. If we implode down there, I mean that's what, down 40 plus bucks, that's down 30% or so. You better believe I am scooping up Micron until I can't scoop it up anymore.
That's what you did with Dell.
Yeah,
Easy winner for you.
that worked out. All right, guys. Thank you so much for joining us today on our live stream here. Again, we are here twice a week down on the SIBO trading floor, the S&P 500 options pit, live. Really appreciate it. My pleasure today is just in honor my buddy here, my buddy Charlie Moon. You guys got to check him out. Check him out at Prosper. Check him out on social media at Disciple of Trend. This guy is the bomb. Everybody.